students, welcome to lecture number 32, where we will be seeing module 5 deductions on the subject direct taxation. So we know that under this chapter we have different types of deductions under section 80C to 80U, computation of tax liability of individual, set off and carry forward of losses which you have only theory, and problems on computation of taxable income and tax liability of individual. So today again we will be continuing with the permissible deductions under section 80C to 80U. In our previous lecture, that is lecture number 31, we have seen all the deductions under section 80C. So today we will be seeing the deductions under section 80D. So let us know this, because see, when they ask you to compute the total taxable income of an SSE, this is a format that you are supposed to use. So let us revise this format till we complete the module. So you have to take the income from all the 5 heads, that is income from salary, house property, profits and gains from business and profession, capital gains and other sources. You need to total all those income. When you total all the incomes from the 5 heads, you get gross total income. From this gross total income, when you deduct the deductions under section 80C to 80U, which we are dealing in this particular module, when you deduct, you get total taxable income. And on this total taxable income, you are liable to pay tax in the prescribed rates. In module number 1, we have seen different rates of tax for an individual. What are the normal slab rates? So according to that, you will need to charge. So let us continue with the permissible deductions under section 80C to 80U. So yesterday, whatever is there highlighted in bold, we have already seen it yesterday in our previous module. So 80C, a quick revision. Under 80C, we saw that any individual or HUF can get a deduction under this section if he is putting his savings or making an investment in some 22 list of categories. If he's making the payment, like if he's paying premium for the life insurance of himself, spouse, children, or if he is repaying the house loan of it, or if he's paying tuition fees of his children, so you get deduction under section 80C. 80CCC, we know that if it is this deduction is available only to an individual, and when an individual is making some payment or depositing some payment in a pension funds, that is a plan of LIC or set up by LIC, that is Life Insurance Corporation, then he'll get deduction under 80CCC. 80CCD, we have seen that when an individual, either he is employed by the central government or employed by any other employer, then he will get a deduction if he is contributing to the pension scheme of central government, that is NPS, National Pension Scheme. When he is contributing for the central government, he will get deduction under section 80CCD. 80CCE, we have seen that the total deduction under 80C, 80CCC, 80CCD should not exceed 1,50,000. So that is depicting under section 80CCE. Even under 80C, the permissible maximum amount of investment that can be made is only up to 1,50,000. 80CCG, we have seen that when any person is contributing to Rajiv Gandhi Equity Savings Schemes 2013, he will get a deduction under section 80CCG. Okay, let us today see the sections like 80D, 80DD, 80DDB, and 80EEE. Okay, students. So let us start with section 80D. When will any SSE or individual get a deduction under this section? Remember, students, under 80D, an individual is going to get a deduction if he is paying a premium, but not on his life. Because if he's paying on his life, he will get a deduction under 80C. If he's paying a premium for the medical insurance, is going to get a deduction under section 80D. So 80D is nothing but deduction in respect of medical insurance premium. So let us see, here there are different scenarios. Let us understand that. In case of an individual, okay, suppose I am an individual, okay, and I am paying premium on the medical insurance of my family. Now, when I say family, that means my spouse and my dependent children come under the definition of family. So suppose as an individual, I am taking a medical insurance and paying premium for that, I will get a deduction under section 80D, okay, for an amount of 25,000. Maximum amount of deduction I can get is 25,000. Or suppose if I'm contributing to central government health scheme. First is if I'm paying premium on health insurance, I will get a deduction. Also, if I'm making a contribution to central government health scheme, still I will get a deduction up to extent of 25,000. And suppose if I am contributing to any health scheme, but that health scheme should be notified by the central government. If yes, then I'm going to get a deduction under section 80D for an extent of 25,000. So students, remember the first part, what it is saying under section 80D is when any individual is either paying premium on the health insurance of himself, spouse or dependent children. Second, if he is contributing to the central government health scheme, or third, he is contributing to any health scheme which is notified by the central government, then yes, he is going to get a deduction, but deduction is only maximum up to 25,000. Next part that we need to understand under this section is, suppose if he is taking an insurance in the name of his parents. In the first part we saw it is only family, and family parents are not included. Only himself, wife and children are included. But in case of he's taking a insurance premium for parents, then further 25,000 is allowed as a deduction. Third thing, suppose if his parents are a senior citizen. Now, if any of these, this limit of 25,000 was applicable only if they were below the age of 60. But suppose if they are above the age of 60, then instead of the maximum limit of 25,000, you get an extended limit of 50,000. So remember students, quantum of deduction in case of senior citizen, when I say senior citizen means 60 years or more of age is called a senior citizen. So the limit of deduction will not be 25,000, it will be 50,000. Third part what we have to see here is under section 80D is that if you are paying any payment towards preventive health checkup. Now people usually go for a regular health checkup, so just to know if they are into any kind of disease or they are fine, just a regular health checkup, then the further deduction of 5,000 will be given, but this 5,000 will be in the limit included in 25,000 and 50,000. So for preventive health checkup, the deduction is 5,000, which is included in that 25,000 or 50,000. Now what has to be the mode of payment? So for claiming deduction under section 80D, if you are making a payment for the preventive health checkup, it can be in any mode including cash mode. But suppose exception preventive health checkup, you are making the payment towards any other thing, it has to be in other than cash. It can be in any other mode but not in cash. So only preventive health checkup payment you can make in cash, and the other premiums that you're paying for health insurance, it has to be in any mode other than cash. So let us see the fifth part in this section, that is 80D. Now, deduction for medical expenditure incurred on senior citizens. Students, remember, suppose if the SSC is not taken a health insurance for his parents, Okay, or if he's not taken health insurance, then whatever medical expenditure he is incurring, okay, he will get a deduction of 50,000. So deduction for medical expenditure incurred on senior citizens, provided he is not taken a health insurance, so he has to make the payment from his pocket. So the maximum deduction he can get is 50,000 for medical expenditure incurred on senior citizen. And senior citizen we know is a person who is 60 years or more. So students, have you all understood section 80D? 80D simply is divided into 4 parts. What is the first part is where an SSE, where an individual is paying insurance on the paying premium on the health insurance of himself, spouse and dependent children. The limit is 25,000. He will get a deduction. Also, if he's contributing to the central government health scheme, he's going to get a deduction. Also, any other health scheme which is notified by central government, he will still get a deduction. Suppose if he's taking for his parents, he's going to get a deduction, further deduction of 25,000. If his parents are senior citizens, he's going, or any of the individual also is a senior citizen, he's going to get a deduction of 50,000 and not 25,000. If there is a preventive health checkup, it is having a deduction of only 5,000. But that payment towards preventive health checkup should be made only and only in cash. But other premiums you have to pay in any mode other than cash. And if suppose medical insurance is not taken and any medical expenditure is incurred by the individual, then 50,000 rupees deduction he can claim. So let us just see the summary of section 80D. So nature of payment, expenditure on behalf of, and what is the amount of deduction. So any premium paid otherwise than by cash to keep in force an insurance on health. So if you're paying in health insurance, in case of an individual, that is his spouse, children, dependent children, it is 25,000 deduction he will get. Even in case of HUF, family members, if you're taking any health insurance, you will get a deduction of 25,000. Not only for the premium that you're paying, but suppose if you're contributing to central government health scheme or preventive health checkup, all this together, put together, you'll get a deduction of 25,000. Preventive health checkup, the deduction is only 5,000, which is included in this 25,000. But suppose in case any of the above person is the age of 60 years or more plus resident in India, the deduction will increase from 25,000 to 50,000. So remember students, if any person is senior citizen, that parents are senior citizens, or SSE himself is a senior citizen, the deduction will be 50,000. We seen this. The second part is if any premium is paid otherwise then by way of cash to keep in force an insurance on the health and preventive health checkup. If these two are there, then if it is taken on the name of the parents, it is 25,000. But if parents or both are 60 years or more, you will get a deduction of 50,000. And we know that the maximum 5,000 allowed as a deduction for aggregate preventive health checkup expenditure by way, including cash, mentioned in 1 and 2 is subject to the overall limit of 25,000, 50,000 as the case may be. So within that limit only the 5,000 is included. Next, third part, we saw that if amount paid on account of medical expenditure. So suppose you have not taken health insurance, but you have paid money on the medical expenditure of your spouse, parents, okay, who are 60 years or more, then you are going to get a deduction of 50,000 rupees. So this is all about section 80D. So 80D is nothing but, remember students, deduction in respect of medical insurance premium. Did everyone understand section 80D? Yes, students, did everyone understand section 80D?
Yes, ma'am.
Yes, ma'am.
Okay. Now let us see a problem on section 80D so that you will understand the concept better. Mr. A, who is aged 40 years. Now, he is less than 60 years, so he is not a senior citizen. Mr. A is not a senior citizen, but he paid a medical insurance premium of 20,000 during the previous year 19T to ensure his health as well as the health of his spouse. So for himself and his spouse, he's paid a medical insurance premium of 20,000. He also paid medical insurance premium of 75,000 during the year to ensure the life of his father, who is aged 63 years and who is not dependent on him. So whether dependent, not dependent, father, he is 60 years or more, so he becomes a senior citizen. He contributed 3,600 to central government health scheme during the year. He has incurred 3,000 in cash on preventive health checkup of himself and his spouse, and 4,000 by check on preventive health checkup for his father. Okay, compute the deduction allowable under section 80D for the assessment year 2020-2021. Now students, you all got to answer this. If Mr. A is aged less than 60 years and if he is paying medical insurance premium on himself and spouse, what is the limit? Is it 50,000 or is it 25,000? Students, are you all there?
Ma'am, can you repeat the question once?
He's not a, it is 25,000, but 25,000 maximum is 25,000 he can claim, but 20,000 is falling well below 25,000 is the limit, and 20,000 premium he's paid. So 20,000 is falling below 25,000. So he will be allowed a deduction of complete 20,000. Next, he also paid a premium of 75,000 for his father who is aged 63 years. Now for senior citizen, what is the maximum amount of deduction that can be claimed? It is 50,000. For less than senior citizen, it is 25,000. For senior citizen, it is 50,000. So 47,000 he can claim full because it is below the maximum limit of 50,000. Now, he contributed 3,600 to central government health scheme during the year. Now, students, tell me, this 3,600, can he claim a deduction under section 80D? Yes, students. Does contribution to central government health scheme, is it covered under the section 80D?
Yes, ma'am.
Students, yes, it is covered because we saw that here we have seen that apart from the premium that you're paying, any contribution made to the central government health scheme is also covered under section 80D. Only we need to keep in mind that the total of all that should not exceed 25,000. So it is 3,600. So 20,000 is paying premium plus 3,600 becomes 23,600. Still it is below 25,000, so he can claim a deduction. Next, he incurred 3,000 in cash for preventive health checkup, and we know that if he's paying cash for preventive health checkup, that is allowed. Now tell me students, is he exceeding the limit of 25,000? 20,000 plus 3,600 plus 3,000. So how much it becomes? 26,600. But he's allowed up to only, what is the maximum amount of deduction that he's allowed? He's allowed only 25,000. So we have to make sure that from this 3,000, we take only the portion up to, which reaches up to 25,000. Next, he has taken also preventive health checkup for his father who is aged 4,000. Of an amount of 4,000 rupees. So for father, the limit is, since he's a senior citizen, the limit is 50,000. Now 47,000 he's paid premium plus 4,000. So it becomes how much? 51,000. But for father, the maximum deduction is only 50,000. So here again we have to minus 1,000 in order to derive at 50,000. So let us see the solution. See, we need to write particulars, actual amount and maximum amount that he can avail. So medical insurance premium paid for self and spouse is 20,000. Yes, he can claim full 20,000. Contribution to central government health scheme was 3,600. Yes, he can claim 3,600. Why he can claim all this? Maximum, because it is falling below the limit of 25,000. Now, expenses on preventive health checkup of his self and spouse. This is 3,000 here. But can he claim full 3,000? No, because if he claims full 3,000, the amount will become 26,600. But the maximum amount of deduction that you can claim under section 80D for a non-senior citizen is only 25,000. So you write your 25,000. See what is the difference amount in order to make this total as 25,000. So out of 3,000, he can only claim 1,400. So maximum deduction that he's going to get is 25,000 for himself and spouse. The second part is premium paid or the medical expenditure incurred for father who is a senior citizen. So Mediclaim premium paid for the father is 47,000 and he will be allowed full 47,000 because it is within the limit of 50,000. But expenditure on preventive health checkup, he actually incurred an expenditure of 4,000. But that total comes to 51,000, but he is allowed a deduction of only 50,000. Therefore, 1,000 we got to minus from 4,000 in order to make this total as 50,000. So total deduction under section 80D, what was his name? Mr. A is going to get is 25,000 plus 50,000. That is total 75,000 is the amount of deduction that Mr. A is going to get under section 80D. Students, is this clear? Is this sum clear?
Yes, ma'am.
Yes, ma'am.
Okay. Now let us see one more sum on same 80D section. Okay. Mr. Y, aged 40 years, paid medical insurance premium of 22,000. Okay, during the previous year 1920 to ensure his health as well as the health of his spouse and dependent children. So 40 years means he's a non-senior citizen. His limit is going to be 25,000. So 22,000 full he will get because it is below 25,000. Next, he also paid medical insurance premium of 33,000 during the year to ensure the health of his mother who is aged 67 years and who is not dependent on him. See, parents are dependent, independent, that is irrespective. But you will get a deduction if you're paying insurance on the medical insurance, premium for the medical insurance of your parents as well. So if 67 years means she's a senior citizen. If she's a senior citizen, the limit of deduction is 50,000. So 33,000 full deduction she will get because it is below the limit of 50,000. Next, he incurred medical expenditure of 20,000 on his father, aged 71 years, who is not covered under the Mediclaim policy. So we know that if a particular parent is not covered under Mediclaim policy, the limit of deduction is 50,000, which is included in that limit of the parents, 50,000. So yes, if you add 33,000 plus 23,000, it becomes 53,000. But for parents, the limit is senior citizen, the limit is only 50,000. So additional 3,000, he will not be getting the benefit of it. Next, his father is also not dependent on him. It's okay. He contributed 6,000 to central government health scheme during the year. Now he contributed, that means Mr. Y himself contributed. So again, contribution to central government health scheme will form part of deduction under section 80C. So even if you, for Mr. Y, what is the limit? 25,000. So 22,000 plus 6,000, it becomes how much? 28,000. But can he get a complete deduction of 28,000? No, he's going to get only a deduction of 25,000 because 25,000 is maximum for non-senior citizens and 50,000 is maximum for for senior citizens. So let us see the solution. Deduction allowable under section 80D for assessment year 2021-2020. Sorry, it is 2020-2021. Medical insurance premium paid for self, spouse and dependent children 22,000. Contribution to central government health scheme 6,000. So total becomes 28,000, but this is restricted to only 25,000. Next, medical premium paid for mother who is 60 years of age, that is 33,000. Medical expenditure incurred for father who is over 60 years and not covered by any insurance 20,000, which is total of parents is coming to 53,000, but it is restricted to 50,000. So the maximum deduction that he's going to get under section 80D is 75,000. Students, is this sum clear? Yes, students?
Yes, ma'am.
Suppose here it was only 22,000. So he'll get a deduction of 22,000, not 25,000. You have to take lower of the both. Maximum is 25,000. But suppose if it's incurred 22,000 only, suppose this was not their contribution to central government health scheme, then 22,000 would be the amount of deduction in case of himself, parents and spouse. Sorry, himself, dependent children and spouse. So I hope section 80D is clear to everyone. Now let us move to the next section, that is section 80DD. Now what is section 80DD is telling that, remember double D is dependent disability. So this deduction will be available if the SSC or an individual or HUF is making or some expenditure for the medical treatment of dependent disabled. Remember, this is only for dependent disability. Okay, so who is allowed this deduction? It is allowed to only an individual or HUF. Okay, what payment should he make in order to get this deduction? So if he is incurring any medical expenditure on the treatment, okay, of a person who is disabled, okay, he will get a deduction under this section. Or if he is making payment of annuity or lump sum amount for the benefit of the dependent, okay, then also it will be covered under this section. Suppose the individual who is making payment for the dependent, he expires, okay, and later the particular insurance company or is going to take care of the dependent disabled, then that also payment is covered under section 80EE. Now what is the quantum of deduction? The quantum of deduction is 75,000. Suppose if he has a disability, so the maximum deduction he can claim is 75,000. And in case of severe disability means the person is 80% or more disabled. He cannot do any work. He cannot move. More than 80% if he is disabled, it is called severe disability. And the deduction will be 1,25,000. And if an SSC wants to claim a deduction under this section, he has to furnish the certificate that that particular dependent is disabled by the medical authority. Okay, he just cannot name any of his dependent as disabled. A certificate is required by the medical authority stating that yes, the individual's dependent is disabled. Okay, so what is the meaning of dependent? Let us see first. In case of individual, the spouse, the children, the parents, brother, sister of the individual who is wholly or mainly dependent on such individual and not claim deduction under 80U is going to be a dependent in case of individual. We will be concentrating more on individual because in this module you have sums only on individual. So students, who is an dependent in case of individual? Only his spouse, children, parents, brother, sister. Now your grandparents, grandmom, grandfather is not included. Uncle, auntie is not included. Okay. Now next. So let us see a sum on section 80DD. Again, I'm telling section 80DD is only when you are an SSC is paying for the medical treatment of a dependent disabled. So what is the limit? The limit is 75,000 if is disabled, but if is severely disabled, the limit is 1,25,000. Now, who is dependent? We know spouse, children, parents, brother, sister. Now, let us see the sum on section 80DD. Mr. X is a resident individual. He deposits 50,000 with Life Insurance Corporation every year for the maintenance of his handicapped grandfather who is wholly dependent upon him. The disability is one which comes under the previous Persons with Disability Act 1995. A copy of certificate from medical authority is submitted. Compute the amount of deduction under section 80DD for assessment year 2020-2021. Now students, tell me, will Mr. X get a deduction under section 80DD for paying 50,000 rupees?
No, ma'am.
Yes, students?
No, ma'am.
Why will he not get?
Ma'am, it is only for his children, spouse, brother or sister, grandfather, grandmother.
Very good. And very good. Very good. So he is a handicapped grandfather, so he will not get a deduction since in the definition of dependent, grandfather doesn't fall. Next, what will be the deduction? Okay, if Mr. X had made this deposit for his dependent father. Now suppose not grandfather, the same sum we take where he is making a payment for his dependent father. Then what will he get a deduction?
Yes, ma'am.
Yes, ma'am.
Yes. What is the amount of deduction?
Ma'am, 75,000. And if severe disability, that is 1 lakh.
1,25,000 if it is a severe disability. So by this we have completed section deduction under section 80D. 80DD is nothing but dependent disability. 80D, quickly tell me students, what is 80D? Premium paid on the health insurance of spouse, children and parents. That is limit is 25,000. If they are senior citizen, it is 50,000. And for preventive health checkup, it can be made in cash, but the limit is 5,000, which is included in the overall limit of 25,000 and 50,000. And 80DD, dependent disability, where the limit is 75,000. Severe disability, the limit is 1,25,000. Now let us next see 80DDB. 80DDB is nothing but when an individual is making an expenditure, medical expenditure, either on himself or dependent, then he will get a deduction under section 80DDB. Okay. Now, what is the quantum of deduction? The deduction amount under this section shall be equal to 40,000. Okay, or whatever amount of medical treatment he is making, whichever is less, he's going to get a deduction of 40,000. Now suppose if the individual is a senior citizen, 60 years or more, then the amount of deduction would be 1 lakh rupees. For senior citizen, the expenditure made on medical treatment will be 1 lakh rupees, or the actual payment made, whichever is less. So students, I hope you all have understood section 80DDB. 80DDB says that deduction in respect of medical treatment, okay, which is incurred either on the individual himself or a dependent. Okay, and what you all need to understand is medical treatment of diseases, of those diseases that is specified in the rules. Okay, only those diseases, if they are covered, he will get a deduction of 40,000. And if they are senior citizen, or if he is a senior citizen, he will get a deduction of 1 lakh rupees. So let us see the maximum limit of deduction under section 80DDB. A senior citizen being a resident individual, 1 lakh rupees, and other than senior citizen, the limit is 40,000 rupees. So did everyone understand the deduction under section 80 DDB?
Yes, ma'am.
Okay. Now let us go to section 80E. 80E is nothing but an SSC is going to get a deduction under this section for the interest on loan that he pays for higher education. So suppose if you have taken a loan for doing MBA, okay, later when you all start earning and start filing your income tax returns, that time you all can claim a deduction under this section 80E because you are paying interest on a loan that is taken for higher education. So let us understand this. What are the conditions? The conditions to claim deduction under this section is the loan should be taken for the purpose of higher education, either of his or her relative also is okay, and the loan must have been taken from any financial institution or approved charitable institution. Is this clear? Now meaning of relative here means what? Spouse, children of the individual, or student for whom the individual is a legal guardian. Suppose the student doesn't have anyone, there's a legal guardian who is taking care of the student, he also can claim a deduction. So remember, when I say if you're taking a loan for higher education for yourself, for your spouse, for your children, you can get a deduction under this section, that is section 80E. What is the meaning of higher education? It is nothing but it is education that is pursued after the senior secondary examination. After that, whatever you are pursuing is your higher education. Is this clear? Now, next thing that you need to know is, they have just told you all what is the definition of charitable institution, definition of financial institution, which is not that important. So remember students, under section 80E, you will get a deduction of whatever interest you are paying on the loan that you have taken for higher education, for yourself, for your spouse, for your children. Okay, or suppose if the student doesn't have anyone, the legal guardian can claim deduction under this section for paying the interest on taken for higher education. Here you just need to know what is higher education, what is the meaning of financial institution, etc. So have you all understood section 80E, students? Yes, students?
Yes, ma'am.
Yes, ma'am.
Okay. Let us now see section 80EE. Now 80EE is nothing but deduction for interest on loan borrowed for acquisition of house property by an individual. So 80E we saw is for higher education loan, what you're taking, interest what you're paying, that interest will be allowed as a deduction. Now 80EE is nothing but interest on loan that you're paying, okay, and that loan is taken for acquiring a house property by an individual. So if you're paying an interest on the loan acquired for acquiring the house property, you will get a deduction under section 80EE. Now let us see what is the conditions and what is the limit. An individual who has taken a loan for acquisition of residential house property from any financial institution, interest payable on such loan would qualify for deduction under this section. Now, what is the period of benefit up to which year you can claim the deduction? The benefit of deduction would be available till the repayment of loan continues, because till the loan becomes nil, every year you're going to pay interest, and every year till you repay the loan you can claim deduction under section 80EE. Now, what is the quantum of deduction? What is the amount of deduction you can get? The maximum deduction that you can get is rupees 50,000. Okay, the deduction of up to 50,000 under section 80EE is over and above the deduction of up to 2 lakh rupees available under section 24 for interest paid in respect of loan borrowed for acquisition of a self-occupied property. Students, if you'll remember theory of module number 2, that is income from salaries and house property, in that house property I told you all that there are deduction for the interest on capital borrowed. For that, you get a deduction of 2 lakh rupees. Now, this deduction under section 80EE is over and above that 2 lakh rupees. That 2 lakh rupees deduction you will get only under income from house property. Apart from that, 50,000 deduction, further deduction you will get for interest on loan borrowed for acquisition of house property by an individual. Here they have explained what is the meaning of financial institution and housing finance company. Next, let us see a sum on this. Okay. Mr. A purchased a residential house property for self-occupation at a cost of 45 lakhs on 1/4/2017, in respect of which he took a loan of 35,000 from bank. 35 lakhs from Bank of India at 11% per annum on the same date. The loan was sanctioned on 28th March 2017. Compute the eligible deduction in respect of interest on housing loan for the assessment year 21-22, assuming the entire loan was outstanding on 31/3/21 and he does not own any other house property. Now see, when there is an interest on loan borrowed for acquisition of house property, you will get deduction under two heads. One is under the head income from house property, and second is deduction under chapter 6A, that is from the gross total income you will get a deduction under section 80EE. Now let us see the solution. Deduction allowable while computing income from the head income from house property, maximum he can get a deduction of 2 lakh. So let us see what is the actual interest he is paying. So what you have to do is 3 lakh 35 lakh into 11% is nothing but 3 lakh 85,000. Total interest he is paying is 3 lakh 85,000, but he will not get full 3 lakh 85,000 because under the head income from house property, maximum he can claim is 2 lakh. Now, deduction under chapter 6A. Under 6A, that is under section 80EE, he is going to get a deduction of how much? 50,000 is the maximum. So out of 3 lakh 85,000, 2 lakh he's already claimed a deduction under income from head house property. Remaining is 1 lakh 85,000. Now under section 80EE, can he claim a complete deduction of 1 lakh 85,000? No, because the maximum deduction that he can claim under section 80EE is only 50,000 rupees. So 50,000 is the deduction he will be getting under section 80EE. So students, have you understood section 80E? 80E is interest whatever an SSC is paying for the loan taken for higher education, he will get a deduction, and 80EE is interest on the loan whatever he is paying for acquiring the house property. He is going to get over and above the exemption that he is getting under the head income from house property. So is section 80E and 80EE clear, students? Yes, students?
Yes, ma'am.
Okay. Now, since we are having 10 more minutes, let us even see section 80G. Remember, students, section 80G is nothing but deduction in respect of donation to certain funds, charitable institutions, etc. So 80G means whenever any SSC is making a donation to some funds, we will see which funds he is making donation, then he is entitled for a deduction under section 80G, and this deduction is a deduction given from the gross total income in order to arrive at the total taxable income. Now, what is the quantum of deduction? Remember, under 80G, they are divided into 4 classes. Remember, students, 80G deductions are divided into 4 classes. One type of donations that you're making, you will get 100% deduction without any maximum limit. Suppose even if you're making 1 lakh as a donation, you will be given full 1 lakh deduction without any qualifying limit. When I say qualifying limit, is without any maximum limit. So remember, under 80G, you have 4 classes. One is 100% deduction you will be getting if you're donating to the specified funds. I'll read out the funds. Second class is 50% only deduction you will get, okay, without any limit. So whatever donation you're making, out of that only 50% of that donation you will be getting as a deduction without seeing any maximum limit. The third part is you will be getting 100% deduction, but with the qualifying limit. With some limit, you can get 100% deduction. And the fourth part is you will get only 50% deduction for the donations that you're making with qualifying limit. So here, where what are the four types we have seen in section 80G? We have seen donation you're making where you'll get 100% deduction without any qualifying limit. Donations that you're making where you'll get 50% deduction without any qualifying limit. Third, donations that you're making where you're going to get 100% deduction but with qualifying limit. And fourth is donations that you're making where you're going to get only 50% of deductions but with qualifying limit. So let us see. So ATG is all about donations. So first class, let us see, is donations qualifying for 100% deduction without any qualifying limit. So if an SSC is donating to the National Defense Fund set up by the central government, he will get 100% deduction irrespective of the amount, because this is falling under which class? Without any qualifying limit. So similarly, if he's making a donation to this 24 set of funds, this 24 set of funds if he's making, he's falling under the first category where he's going to get 100% deduction without seeing the amount. Okay, so I'll just quickly read out. If he's donating to Prime Minister's National Relief Fund, Prime Minister's Armenia Earthquake Relief Fund, the African Fund, the National Children's Fund, the National Foundation for Communal Harmony, approved university or educational institution of national eminence, chief guest earthquake relief fund, any fund set up by the central government of Gujarat exclusively for providing relief to the victims of Gujarat earthquake, any Jilla Saksharta Samiti constituted in any district for improvement of primary education in villages and towns for literacy and post-literacy activities, National Blood Transfusion Council or any state blood transfusion council whose sole objective is the control, supervision, regulation or encouragement in India of the services related to operations and requirement of blood bank, and so on. All this 24 different funds, if he's contributing, is going to get 100% deduction without seeing the limit. Now let us see the second class. Second class is nothing but donation qualifying for 50% deduction without any qualifying limit. This first part was 100% without seeing the expenditure or without seeing the donation limit. Second is 50% deduction, again without seeing any qualifying limit. So here you have is four. That is the Jawaharlal Nehru Memorial Fund, Prime Minister's Drought Relief Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation. If in any of these four he is donating, he will get only 50% of the donation that is making. So suppose if the SSC is donating to the Prime Minister's Drought Relief Fund, suppose he is donating 1 lakh rupees, he will get 50,000 as deduction without seeing the limit of any limit. Next is third class is donations qualifying for 100% deduction but subject to some limit. So suppose if he is contributing to government or any approved local authority institution for the promotion of family planning or Indian Olympic Association. So if he is donating towards the promotion of family planning or towards Indian Olympic Association, he is going to get 100% deduction but subject to a limit. Now what is this qualifying limit? How to calculate? I'll tell you all. Fourth one is donation qualifying for 50% deduction subject to qualifying limit. Again, you have to see the maximum limit here. And if he's contributing to this 5 funds. 5 funds are, first fund is for charitable purpose. Second is for any charitable purpose other than the purpose for promoting family planning. Then the third one is any authority constituted in India by law enacted either for dealing with or satisfying the needs of housing accommodation for the purpose housing accommodation of villages or towns. Then the fourth one is any corporation established by central or state government for promoting the interest of members of minority community and for renovation or repairs of notified temples, mosque, gurudwara. If he is contributing to this 5, he's going to get 50% deduction, but you have to see the limit. Now, what is this qualifying limit? We will be seeing. So for today's class, tomorrow we will be seeing the qualifying limit. Qualifying limit is nothing but 10% of adjusted total income, gross total income. Now, what is that calculation? It will require much more time. So we will be covering in our next lecture. So remember students, 80G, we are leaving it, we are not completing it fully, only we have done it half, where we have seen that any SSC making donation to any of the 4 classes, he is going to get a deduction. 4 categories of deductions are covered here. So did everyone understand 80G partially whatever I have explained? Yes, students?
Yes, ma'am.
Yes, students?
Yes, ma'am.
Okay. Tomorrow I'll give you all a shortcut to remember these funds. How are you going to remember these funds? I'll give you all a technique by which you all can remember these funds. And so that you'll are able to better understand under which category it is going to fall. So we have seen today in today's class section 80D, 80DD, 80DDB, okay, 80E, 80EE, and 80G partially. So before we conclude the class, can quickly anyone just tell me what is 80D? I don't want the limits because it is not so easy to remember the limits so easily. Quickly, can anyone tell me 80D deduction is given? Why? Why is 80D deduction given? Students, are you all there? Students? So 80D deduction is given when an individual is paying medical insurance premium. 80D deduction is given. 80DD is nothing but maintenance, whatever he is paying, including the medical treatment of a dependent disabled. And 80DDB is given for deduction for medical treatment of specified diseases. Whatever treatment, if the individual is incurring for some medical treatment of specified diseases or ailments, he is going to get a deduction under section 80DDB. 80E deduction is given to an individual for paying interest on loan that is taken for higher education. 80EE deduction is given for a loan, for paying the interest on loan which is borrowed for the purpose of acquiring a residential house property. And 80G deduction is given for to an individual for the donations that he's making to different funds. Now again, the limit of donation, there are 4 categories. One is 100% deduction without limit, 50% deduction without limit, 100% deduction with limit, 50% deduction with limit. So students, we have completed 80D, DD, DDB, 80E, 80EE, and 80G. Have you all understood all these sections, students? Students, have you all understood these sections?
Yes, ma'am.
Okay. Thank you so much, students.